You can drop every trading strategy that you are using right now and let your mind get filled with this simple trading strategy with a 90.3% win rate. Very simple, but very effective to make you your first $1,000 and more in trading. I've been trading for 9 years now, and my first 2 years of trading was a joke. I was a brokey, and my trading journey was filled with the sadness of multiple losses. My friends and family were laughing at me. I saw a lot of pips, but I can't take any from the market. It got to a point that even my mum suggested I find another job that worth my time, cause I can't keep eating her food and growing fat, doing nothing worthwhile but staring at the computer screen. Honestly, I left home to feed home, but home started feeding me. Everything happening around me then gave me more reason to give up, but not until I found this strategy. Everything changed fast. I began to see consistent blue lights on my portfolio. For the first time, my eyes glittered. I breathed a breath of fresh hope. Soon everybody started seeing a new difference in my lifestyle. My drips now getting harder each day. And they knew for sure something great must have happened to me. My friends who used to laugh at me now wants to learn from me. And even my mother became more of a believer than an advisor, because the results were evident. Though I have mastered a lot of strategies in the following years after that, but this is the foundation of my successful trading journey, and this strategy will make any trader profitable or more profitable in their trading career, as they follow everything that I instruct them to do in this video. You may be watching for the first time. Welcome to the trading tribe. Tap the subscribe button to make yourself officially part of the family, and as you subscribe, turn on the post notification to get the best from our trading videos and never miss out on any future videos. In this video you will learn 1. Market structure. 2. How to use this strategy. 3. The best time frame for the strategy. This is the foundation of every trading strategy. To understand this movement and make the best out of it, the first day you looked at a trading chart, what was the first thing that came into your mind? The mind keeps asking, what does this even mean? Is this a game or something? And the more you looked at it, the more confusing it looked, and you begin to spend more time on the chart to understand it more, but it seems like your mind just can't get enough of what to understand. Many of us have passed through this stage, and that's because we are trying to complicate a very simple market. And as you do that and start approaching a stage of maturity, you begin to see the market more simple than ever before. If you take a look at this chart, you will see a lot of price movements in different behaviors as the market moves in a trend. This different behavior is what complicates the minds of many traders. And do you know, there is a simple way to filter them out. We will get to that soon. The market can change trend direction and still be showing you the same movements and characters you saw in another trend. Then you think to yourself, is this not what I just saw in the last trend? This repetitive behavior shows us that these movements do not form mysteriously. They can all be predicted, and there is a way of entering into the trend as the river keeps flowing, before it hits a spot and changes into a new direction. To filter these movements, traders use tools like the support and resistance lines, the trend lines and more. Here, I will be showing you how to win the market using trend lines and a few simple rules. Now let's get into it. When the market is moving in a particular direction, our goal is to flow in that same direction with it. I always like to use a moving train for an example. A train is so big and strong that whenever it is on a journey, nobody dares to stand in front of it. And it's not just because it is big and strong and very long. It is because it does not stop until it reaches the final destination. Anyone that dares to stand in front of a moving train is just so happy to quickly see his creator. The market is like the moving train. No matter the amount of money you are trading with, you can never stand in front of it, because you are not the only one trading the market. Even if you are a bank or a hedge fund trader, your money does not make up to 10% of the overall market value. The market consists of trillions of dollars and millions of people trading it. Instead of being a Rambo, going against millions of traders, it is better to go where the money is and move along with the flow wisely. Since we are going with the flow, this is how we are going to do it, in order to get the best of it. When you see a big movement like this one, you will wait for a smaller retracement like this one, which was not too small, but it was not just as big as the first movement. This means that the second price movement, which is the retracement, could be smaller, but it must not be as large as the first movement. This will bring our first rule, which states that the second retracement move must never be larger than the first trend movement. You may need to write that down, as that will be the foundation on which the next rules, which I will be giving you in this video, will stand on. The reason why this is very important is because we are trying to flow with the trend, and we don't want to have another trend growing inside it. If the retracement begins to get bigger than the previous trend movement, that will be a potential reversal coming up, and you don't want that to happen. You want to be in the safe spot with the current trend. Think of it like a big brother and a younger brother. So the previous movement is a big brother guiding the retracement, which is the younger brother, on the way to live right and better. And as long as the younger brother is under the frame of the big brother, he will keep going on the right path. And if the younger brother decides to step out of the frame of the big brother, that means he's beginning to choose a new path for himself. And as he keeps moving on this new path, he's going to be mentoring another younger brother on this new path, which he has chosen for himself. And the circle repeats again and again. In conclusion, the retracement must not be larger than the last previous trend movement, and by so doing, it assures us of a smooth continuation of the trend. Now let's get to rule number 2. The second rule is that there must be small opposite trending movement structures during the retracement. This is to reveal to us the strength and ability of the opposing traders at that point. Do they have enough power to reverse the trend, or they are just giving us a chance to take their money? This trending movement shows us how weak the strength of the buyers are in taking over the market, and so we draw a trend line on it and wait for a breakout. It is from this breakout that we can finally confirm that the sellers are in control of the market. After the breakout has been confirmed, there are 2 ways to trade the market from here, and any of these 2 ways are great. You can decide to use only one of them, and you can also master the both of them. It all depends on how bad you want the bag. The first step is to draw out a horizontal line from the last low of the little uptrend movement and wait for price to return to it. This strategy also works really great for breakout traders. When you draw it out, you wait for price to touch it and give you a clear entry signal candlestick. The lines are drawn from the last low, as it represents the little struggle of the buyers, which were now taken over by the sellers, and then returning to pick up the last orders, before going down, in continuation of the trend. My best candlestick for trading this strategy, the pin bar and the momentum candles. The momentum candles includes the bullish momentum candles and the bearish momentum candles, and in this case, we will be looking for a bearish momentum candle, since we want to sell the trade. Remember, a momentum candle is a candle with 80% body, with 20 to 0% wicks. The pin bar we are going to be expecting varies according to the target direction. For a downtrend, we are expecting a bearish pin bar, and for an uptrend, you'll be expecting a bullish pin bar. The second way of trading this is to draw out a box at the top of the last price movement before the breakout. This becomes important because most times the market breaks out without this higher low. And because of this, I will have to draw my box from the top of the price movement, and wait for price to return to that box before I trade it. And for this, you will also be using the same candlestick entry candles, which I have mentioned earlier, the pin bar and the momentum candlesticks. When the price breaks out of the trend line, note this, fast retests are not needed. We want something broader and wider, like this one here, and only after that should we look out for an entry candlestick. And sometimes as you trade this strategy, you are going to see some price movements moving out from this higher low line. If it happens like that, the box also becomes your plan B for the trade. If it still moves out of the box, then you cancel the trade and wait for another setup. This brings us to our last rule for this strategy. The price must never go out of the last trend low before coming back to the line or box. Most times you will see something like this after the breakout. The price will go down and break the last low of the trend before coming back to the target line. Though this works sometimes, but it has a 70% of fail rate, and we don't want something like that. We want to trade with confidence and assurance, knowing exactly what to expect from the market. Now that you have known that, let's move on. The setup is already ripe and great for plucking profits. You then wait for an entry candlestick to appear after touching the line. And then with that, you are good to go. Right here you can see that a momentum candle appeared after touching the line. And with this great signal, we enter the trade. Your risk management should go like this. You place your stop loss at the last high, and your take profit target should be at the next trend low. With this, you wait for the market to hit your take profit target. This trade was a successful one, and this is how you are going to be making these profits consistently, if you follow the rules and all the guidelines that I have been teaching you in this video. Let's take a look at another example. You can see how the market was trending up. Then a retracement appeared. Take a look at how I drew my trend line from the retracement price movements. Remember, we are always waiting for price to break out of the trend line. And as that is done, we are waiting for how the retest of the breakout will look like. On this chart, you can see that there was a little lower high before the breakout, on which we can draw our horizontal line on. What you then do is to wait for a breakout and allow the price to touch that horizontal line. Then you wait and observe the candlesticks that form on the line to see if we can find our entry candles, which will now give us a clue on if to enter that trade or not. Fortunately, we were able to find our entry candlestick there, which is a bullish momentum candlestick, and from what I have been teaching you, you know what to do already at this point. Of course, yes, you enter the trade with confidence. Your stop loss is placed at the low of the trend retracement, and your take profit target at the beginning of the trend retracement. This makes it a very beautiful trade. And you can see how the trade has hit the take profit target. A very beautiful and successful trade. Now, some of you will be asking, what time frame will be best for this strategy? I am about to show you in a second. Many traders have different ways of approaching the market to suit their timing and other day-to-day activities. We have scalpers, day traders, more patient day traders, swing traders and more. It all depends on your patience game and how strong you want to hit the market. But hey, don't go too far in your timing, else time will keep flying and you will get nothing out of your chart. This strategy is best for all time frame, and the best time frame to trade it begins with the 15 minutes time frame. The 15 minutes time frame is the lowest you can go as a day trader. Don't go using the 5 minutes or 1 minute time frames, else you will be confused with a lot of false structures. A more patient day trader can use the 1 hour time frame for this strategy, and the swing traders can focus on the 4 hours and daily time frames. Using anything more than that is just like waiting for a delivery of an item you never ordered. They will hardly come. Sticking to one of these time frames according to the type of trader you are will help you become great in analyzing and identifying this strategy. You don't need to do a top-down analysis, as this strategy does not have a need for that. All you need to do is to stick to a time frame, analyze the trend, and identify the structure. You do these 3 things right, then your life is about to change to a better trader who will be making money consistently from the market. Same way it changed my trading life to a more profitable trader. I will be dropping more strategies like this one and more in the future. Subscribe to make yourself part of the Trading Tribe family. And as you subscribe, turn on the post notification bell icon so you don't miss out on future videos and strategies. I have an online mentorship class for anyone who wants a more personal trading journey with me on the pathway of success with my support and guidance for 3 months. You get all my trading ebooks and a full in-depth trading course from a beginner to a professional profitable trader. Use the link in the description to register